TAX4861. Right, so that as well as your the other section that is out of the Income Tax Act there, we have got also section 31, transfer pricing. It is purely for level 2. So when we get to that one, to say this is purely for level 2, I am going to tell you then level 1s, they can take a break. But that topic, which is actually for level 2 only, it is just going to be a topic that we are going to cover in a day. And it's not going to be anytime soon. It is going to be there towards, I think, towards test 3, test 4 there. So we'll be together, level 1 and level 2. We are moving as a team, isn't it? We'll split later for deceased estate, taxation of deceased estate duty. That one is purely level 2, and it's for your test 4. Right. So let's not waste more time. Let's get into it. Right. So for your CTA or honors, if you're doing that honors text that require you to do 4861, right? This module is based on the study of your Income Tax Act, right? The Income Tax Act, your Psych Handbook, Volume 3, it is the one that is the syllabus of this particular module, right? So what is going to be happening there is that, right, you are almost going to study the entire Income Tax Act, but there are some sections which UNISA says that you don't have to worry about these ones. They are going to be indicated in your tutorial later, right? So you will need your Psych Handbook there to be by your side, because that's the syllabus, right? As for the recording, good people, I'm going to share it after the class, soon after the class. So I can't say record individually there. It can take me time to allow each and every person to record. So I'm simply going to share it. It is going to be available. You listen to it, etc. Okay, as a disclaimer, before we go far, right? As we are independent tutorial providers, we are not affiliated to UNISA. So we just thought that maybe today we just give you a what? We just give you a class for free, right? And then after that, you can decide whether you want to continue with us or you want to go and start with other colleges there. It's fine, right? Or you want to do it on your own. If you are brave, you can take that chance. But the probability that you will pass is going to be very slim. So CTA, good people, is not a lot. Sorry, CTA is not difficult. It just requires you to keep up with the quantity, with the workload. Just do what you have to do. Keep up with the workload. Don't skip any chapter. Don't skip any section. In the case of tax, cover everything that is in the syllabus. You'll be able to respond to each and every question that is going to be posed on onto you in October there when you write your final. Do everything that you need to do. Don't skip anything. Don't give excuse that you are busy at work or whatever. Cover the whole content of that particular module. Because there is a danger now, if you are going to be a Springbok and skip some topics there, it will catch up with you because these topics are interlinked. You say topic 1 is difficult. I'll focus on topic 2 onwards and make sure that I get everything and I totalize on those topics. Then you find out that now the footprints of topic 1 are actually visible across the whole other topics there. Then you are going to struggle. Right. Talking about tax, which is the subject for today, we have to do everything that we need to do. You have got your tutorial letters there, right? And we are going to write 4 tests. They will tell you which tutorial letters you should study for which test, and make sure that you study those tutorial letters. You cover everything, don't leave out anything. Okay, we might think that maybe you are a genius and stuff like that. You just open a tutorial letter, you see a topic and say, this one I know it from undergrad. You are fooling yourself. You are going to be in trouble. You still have to study that topic, but this time for the purposes of what? Of CTA. Because your response for CTA and your response for undergrad, they are quite different. You can respond to your question post at CTA, you respond it correctly. But if your answer is light, they will simply say this is an undergrad response and give you a 0 or even half a mark or 1 mark. You apply for a remark several times, the same result will still come. So here I'm going to be taking you through how you should prepare yourself for CTA and how you respond for CTA purposes. Don't undermine anything here, right? Even if a topic looks familiar, you still have to listen and find out what is changing here from undergrad. Okay, right. So I think I've got that particular thing for what topics are covered for the purposes of what's happening here? The topics that are covered for the purposes of test 1. So I'm going to focus on test 1 here in taxation, right? So now here is our test 1, good people, right? When I'm writing on the board, I won't be able to see anyone who is in the waiting room there, but I'll keep checking. This is our test 1. There's going to be 4 tests. So for test 1, we have to cover tutorial letter 102, 103, and 104. Those are the 4 tutorial letters, those are the 3 tutorial letters that will form part of test 1. And they must be studied in detail. Everything there must be known, right? So don't wait and start seeing the dangers of CTA when you start getting 17% and stuff like that. No, do what I'm telling you here and you won't have problems. Right, so now this is what is going to happen. I'm going to talk like we are going to continue together until October, right? Okay, so for tutorial letter 101, they are simply introducing you to the honors. Go and do it, go and study it during your spare time. No question is going to come out of tutorial letter 101. They also tell you about the prescribed books, etc. You do it. You don't need me there. Okay, which is fine. And then we have got tutorial letter, this one now, 102. Then case laws, right? Remember in text, we make reference to case, the precedent that has been set from the outcomes of the previous case rulings, right? So those case laws, they will cover their VAT-related case laws, their gross income-related case laws. There is going to be general deduction formula-related case laws. So you must know those ones, go through them, isn't it? So that now, when you answer your discussion question on either gross income or either general deduction formula, you might be required to back it up with the reference to case law. And if they want you to back your response with the reference to case law, no matter how good we discuss all other aspects, if there's no reference to case law, now it becomes a problem, because now at this level, you'll be actually exposing yourself to the examiner that I'm not competent. I read the question, but I did not understand all its roots, because the examiner would have said discuss with the reference to case law and the relevant legislation. So there are 3 things that are needed in that answer. That answer is to be complete only if it has got those 3 elements. Did the student discuss? Did the student make reference to case law? Did the student make reference to the legislation? And how the marks are allocated to those 3, we don't know. It is up to the examiner to decide, up to the mark, isn't it? Someone, before even he goes far, if he sees that you did not respond to all the 3 rules, he may throw away your paper, isn't it? Or just give you a pathetic mark, which is not even half, no matter how good you try it on your discussion, and maybe making reference to case law, you'll be deemed incompetent for the purposes of honors level. So don't undermine anything. Right. All right. So what is going to be happening now is that this will become a self-study. Tutorial letter 103 is going to be your self-study, but during revision, I'll be making reference to that particular tutorial letter. Say, okay, when you went through it alone, I hope you realize that now there is this case that talks about accrual. When they say accrued to, what is the case that we can quote? So for gross income, for instance, test number 1, it is going to be gross income. We are not going to do the general deduction formula in test number 1. So now you have to go to, I think it's chapter 2 of tutorial letter 102. It contains the case laws that relate to gross income definition. So look at those elements of gross income. Make sure that you know the cases for each and every element. Though the cases will not contain a lot of marks, but know some cases for each and every element, so that now if you're called upon to make reference to a case law about a discussion maybe of a certain element of gross income, you are going to be able to throw in a case law there to make sure that your answer is complete. So for the purpose of test 1, you need to go through chapter 102 as self-study for your gross income discussion. All right, fine. So I'm done with that one. And I jump to 103. So 103 is going to contain two topics there. It is going to be your donations tax as well as your VAT. So those are the things that we are going to cover there in 102. I'm going to take you through that. Don't have to worry. This 103, sorry. Then we've got your 104. 104, it is going to do with what? Gross income, exempt income, residence, non-residence, double tax agreement, and there will be footprints for capital gains tax. Right, capital gains tax will also apply when we do our donations tax. Right, after we've started those topics, now if you did cover them in depth, then you are what? Ready to answer any question. Okay. All right, so without wasting more time there, let's get into it. Someone is saying there's no audio. Is it the case across, or it is just that isolated incident? Others, you can hear me, I hope. Maybe one person to confirm there.
Yeah.
Okay, so you can hear me clearly. Am I audible?
Yes, you're audible.
All right. Okay, yes, others are confirming there. So it could be, if you can't hear me there, it could be maybe a technical issue on your side there. You can try something. Right. All right, first time. Let's go straight to the syllabus. Your donations text topic for free. It is the first one. Tutorial 103. The first topic is donations text. So I'm going to take you through donation text, and you should see, right? You should see what will be my approach, and that is the approach that you should follow also should you decide not to continue with us when you're starting, isn't it? So that you don't leave out anything. If you leave out any section there, you'll be exposing yourself. The examiner will be able to see that here is a chance taker. Right. All right, so I'm going to respond to all the questions there later, some of them towards the end. So I'm just going to present in such a way that maybe we are not going to have a whole lot of questions. So now what is going to happen, people, with your tutorial later there? Okay, the session is going to be 3 hours long. 9:15 will be done. I hope we would have covered a lot. If ever there is anything that will be left, we shall see when we meet again. All right, so your tutorial letter 103, I opened the wrong one. 103, I opened another wrong one. Right, it is going to contain some sections. I hope you will see them like this. The sections are going to appear like this. Right, so the tutorial letter there, inside it, there will be sections to be covered. Right, so I've extracted the sections to be covered, and I will show you how you shall cover them. If you want to buy silk also, if you've got extra money, you can buy silk, right? But silk is actually doing what we're doing here in class. It is interpreting the Income Tax Act. So when you go to silk, you're actually hearing the interpretation of the Income Tax Act, right? So I would advise you to start from the Income Tax Act itself. If there are things that you do not understand clearly, then you can go to SILC and hear what exactly is the interpretation of that particular section that could have caused havoc. Right, if you open your tutorial 103, good people, somewhere there in one of the pages, you will see this table of contents. It can be scattered all over the whole tutorial, but I have to take it together, join it together, so that now the sections that I have to study for the purposes of tutorial 103 and test 1 are visible. So these are some of the sections, right? And other sections are going to be found in tutorial later. Okay, here I left out VAT. I just took out the ones for donations tax because that's the first topic. When we go to VAT, I'll extract also the sections for VAT. Then I say here the section that you should study and know in and out. Then we do that together. You are not going to be told to go and do certain things on your own. Only thing that you can do on your own there is going to be what? Maybe some homework. Right, here we go, good people. You open this, you sit down, right, with your tutorial and your lecture, and then you identify which sections to start. Right, there at the end, after looking at your selected topics, you realize that there shall be a column for example, and they will tell you yes or no. So you are only going to study the ones that are saying yes. The one that says no, do not bother. If you study that part section, you are wasting your time. No one is going to ask you any question with regards to that particular section. And given that you don't have time, there's no need to study any extra for now. Right, that's number one. And how then do we use this Income Tax Act? The Income Tax Act, good people, it contains some legislation. We have got the Income Tax Act, we have got the VAT, we have got the Security Transfer Act, we have got the East Duty, and we have got the Tax Administration. So there are 5 acts there, bound together into that cycle volume 3. So, for instance, today we are doing donations tax. Right, there's no act that says donation tax there, right? You need to know under which legislation do I find donations tax. It is found under the Income Tax Act. So when I say let's open a certain section on donations tax, make sure that you are within the Income Tax Act. You are not on VAT, because there's a duplication of section. For instance, donations tax is going to be thereabout around section 54 to 64. Right? So of the Income Tax Act, so let's not read different sections there. Maybe I'm reading on Income Tax Act and you are looking at section 64, 54 of the VAT. You won't be actually be able to understand what am I doing there. Because before you will be seeing some strange things. All right. So now having said that, good people, I am simply going to start. I will start by, okay, this I've told you that you only read the ones that say yes, 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 yes. And these are the sections that are selected for you. They say donation tax is found there, section 54 all the way to 64. And I will show you how to navigate your act. Right. Now, you have to use the act, good people. Don't cram anything. You need to know where to find what. You will be required to make reference to that particular handbook. So know it, navigate it nicely. So the navigation part, I will tell you. All right, so let me give you an introduction to donations tax. But these just people, I'm just giving you to relax. You are not going to quote me on this. In the exam, you quote the act. So today we are looking at donations tax. Donations tax, it is, this is a tax on the transfer of property. By way of donation. Right. Tax is law, good people. Law, it has got its own definition of terms. So that property there, we are going to look at the definition, because already maybe you're already wearing your accounting head, then say, oh, land and building. Only if you transfer land and building, that's where you know. We'll look at the definition of property. Okay. by way of donation. Then this one again is paid by residents of South Africa. Okay, so only if a resident person transfer a property by way of donation, all right, will the donation tax implication be triggered. So if a non-resident donates something, then you are required in the exam to calculate or discuss the donation tax implications. You are going to say, hi, Mr. John is a non-resident, therefore not liable for donations tax. But if you say the way I said it also, it can warrant a zero. They might need you to make reference to legislation. So we are going to go to the legislation. I'm just saying this so that when we get to the legislation there, you are not going to panic. You are saying that, but we have yet to say this, and we are seeing it here to confirm what you said. So now for your response, when a non-resident donates property to another person, it will be in terms of section 54 of the Income Tax Act. Non-residents are not liable for donations tax, or is section 55. We shall see that. All right, then we continue. We move on and say donations tax is payable or is calculated percent or 25% of taxable donations. Taxable donation. Right, so now the next thing now is to, are you able to calculate taxable donation? Don't worry, you shall be taught. So applying the 20% people to any amount, which is maybe to any amount, and say that's the donations tax. Anyone can do that. So now your exam or your ability is tested on your ability to your understanding of donations tax will be tested on your ability to calculate the taxable donation there. So make sure that you know how to calculate taxable donation. This is the portion of the donation that is going to be subject to donations tax at 20% or 25%. And this 20% or 25% is not based on the mood. To say that now, it will depend on my mood. I can use 20, I can use 25. No, we are going to see that. And I want you to see it from the act, not to hear it as a rumor. When you are hearing it from me, it's like you're hearing it in the street. You cannot back it up. That's why we shall go to the act, so that whatever you say, it is backed by legislation. That's what they want, right? Okay, so we move on there and say this tax is payable per donation. It is payable per donation. So it's not like it is going to be calculated at the end of the year of assessment of a company or of a natural person. No. You donate in the morning, we stop there, we calculate donations tax. You donate again in the afternoon, we stop there, we calculate donations tax. There's no donation year of assessment now. So that being said, even if the donations are made on the same day, you are not going to add them together and calculate the donations tax or calculate the taxable donations for those donations that were made on that day. Don't add them together. Once you add the two donations in your quest of calculating the donations tax out, you've lost the principle. You don't understand that it is what? Calculated per donation. So that will warrant a zero. Okay, so we move. Okay, Tobeka, you can ask your question.
Hi, can we ask questions during the session, or should we wait until the end?
All right. What do we realize that at the start of the class like this, I'll be taking through the legislation there, so the question might not be allowed. So you can, yes, you can or what can I do? All right, I'll cover then after each section that I go through, I'll ask if there is any question.
Thank you.
Then you can pose your question there. Right. Right, donation tax is payable per donation. You have to know that. And then we are going to say that now donations tax should be paid over to SARS. Paid over to SARS before the end of the month following the month in which the donation was made. All right. So you're going to see this in the act. I'm just making the act so that you can get familiar to the act there. Good people, also don't do a lot of cramming now. It is there in the act. You just have to know how to get it. And I'll show you that. Okay, so that last statement now, it says the donation tax is payable over to SARS before the end of the month, following the month in which the donation was made. They will ask you in the exam, calculate donations tax for Mr. X or for company Y and state the date in which the donations tax will be paid over to SARS. If we are going to read out this, if you're going to write out this, like you're actually reading a script to say it must be paid over to SARS before the end of the month, following the month in which the donation tax in which the donation was made, that's a zero. In the exam, there will be an application. They would have told you that he donated on this day of this month. If the donation was made in February, and given that now before the end of the following month, it should be paid over to SARS. We all know that the month after February, it's March. They can forgive you if this was undergrad. Say, okay, it's a charge, but it's an attempt. It's true what you say there, right? But though he failed to apply. But here, straightforward. We can't have a whole city student just rehearsing and saying that out and not applying to the scenario. You need to apply straight. All right. So now having said that, we also have to know that now the donor is liable for donation tax. Saying here now, it's not final. We are going to go to the Tax Act there. You might hear some adjustment to the rules that I've given you there. But these are the defaults. All right, now having said that and having introduced this now, let's start tax. Let's start our legislation. I go to my section that UNISA said I must study. I look at the first one, that's section 54. It talks about of donation tax. Right, is it in the syllabus? Yes. So what do? I go to my act. So let's reach out to our acts there. Right, the reason why you also have to go through that act is that act is law. It is written in some law language there that might need my explanation. And this is the time to do it. We still have got time, right? But if you come with a month to exam and say, please teach me tax, you know what? I'll feel bad. Say, do I take money? But even if I take him money or his money, he's not going to pass this person. Here, there's no last minute, right? There's no last minute. Move now. Move with the flow now. I've seen people dropping out at deregistering because you leave, you don't start your test one in detail and stuff like that. You fail it. Test two also at work is busy. Before you know it, the test is around the corner. You try to study overnight. It doesn't work, you fail. And now you look back and say, I've been skipping all these chapters. Now I cannot make it. Let me deregister. I'll be better prepared next time. All right, so we go to the act. So let's go to section 54 of the Income Tax Act. The donation tax is found in the Income Tax Act. So this is how you open your text with people. You don't have to use the table of contents, isn't it? So the Income Tax Act is the first act there, right? So you just open any page randomly. You look at the top, it will show which section you are in. If I open any page randomly and I see section 27 up, I know that now 27 is before 54. I still have to page going to the right. If I open randomly and I go to section 67, it will be written at the top there. I know that I passed 50. I will page going backwards for 54. If you are going to use the pages, you will struggle. Not only here at CTA, you also struggle at ITC and continue to struggle even at APC. So get used to doing things the right way. All right, so we won't waste time. So let's try there. I don't know how many of you have got this tax legislation, right? But let's assume we have bought it, is it? It's only, right, so when we get to this section 54, that's the beginning of the donations tax. So you can then use that flag of yours. Your book is like this, right? Use that flag, those things for flagging that you bought. Take the bigger one. Take the bigger one. This tax where it starts tax. Right, it'd be quick to you. It's quick for you to navigate. All right, there's a one way that I've told you that you can page, open any page random. Cool, we are fine there. Now, another way would be for you to go to the index of the Income Tax Act. Go to the index of the Income Tax Act at the back. So for you to get to the index there, let's look at the page number. Where is my index of the Income Tax Act, right? You go to the index. The index is going to give you these things in alphabetical order. We are looking for donations tax. You go there, let's say, but when you go to the index now, we'll be assuming that maybe, you know, you are looking for donations tax, but you don't know the section, right? You go to the index. Then, alphabetical order, you look for donations tax. When you get to that donations tax now, it is going to tell you which section it is. Then you run inside there. Navigating now the way I told you that you look at the top randomly, it is. Remember, you have to be quick. Time will be limited, exam time, right? Let me not talk too much. Let me continue. Right, are we there, good people, on section 54? All right, so it says donations tax, then it says level of donation tax, subject to the provisions of section 56. So now what do they mean by subject to the provisions of section 56? It says that now what is being said there is conclusive, provided it is not prohibited by section 56, right? Right, so 56 is going to come. Subject to the provisions of section 56, they shall be levied for the benefit of the National Revenue Fund a tax in this act referred to as donations tax on the value of any property disposed of, whether directly or indirectly, whether in a trust or not, under any donation by any resident in this part referred to as the donor. Right, so I want us to highlight resident there. Highlight resident. The key thing that we need to highlight is resident. And when they say this tax is levied for the benefit of the National Revenue Fund, it means that it is for benefiting SARS. It's paid over to SARS. That's the collector of this one. So that was section 54. It is short and sweet. Then the exam, then the test will come out of that. Mr. X, a Botswana as a resident, donated what to whoever. Discuss the donation tax implication for Mr. X, or calculate the donation tax liability for Mr. X. There, you then say, Mr. X is a non-resident of South Africa. In terms of section 54, non-residents are not subject to donation tax, only residents. Therefore, there shall be no donation tax implication for Mr. X as he is a Botswana resident. You move on. Clear the implication? Okay, Act, good people, it's hard copy. Right? Act, it's hard copy. I'm not going to be able to share it. You have to get it from the shop as soon as possible before we meet for the next class. Right, so I think that one is done. But make sure that is done after you have understood everything though. There, you should be able to tell someone what section 54 says. Then I go to 64. They are not given in order. but you are going to read them according to the order so given in your tutorial later for a reason. Then we go to section 64. It says rate of donations tax, right? Let's say you are wondering what rate is it? Is it a 2%, 20%, 40, 30? We are going to be answered in section 64. I proceed to section 64, right? Even if you know that is 20%, even if you know that is 25%, people, you still have to go there. They know what they are doing. We don't want to use our general undergrad knowledge to try and pass an honors degree. You'll be in trouble. I'm there on the rate of donation tax. We are on 54, so you page to the right, right? So then we get our rate there. We get our rate, right? The soft copy, again, it can be a very old one. Okay, right, rate of donation tax. The rate of the donation tax shall be chargeable under section 54 in respect of the value of any property disposed of under a donation shall be. Here is the rate, good people. 64A1, 20% of that value, if the aggregate of that value and the value of any property disposed of under a donation until, you can highlight there, until the date of that donation does not exceed 30 million. Right, so the answer is there, right, the rate. They say 20% is used to calculate the donations tax liability, right? If your cumulative value of donations, lifetime since you were born does not exceed 30 million. So when they say it does not exceed 30 million in tax, we are saying that now for donations cumulatively, which are less than or equal to 30 million, you pay donations tax at 20%, cumulative, your lifetime. So now, how is this going to be brought forward in a question? In a question, they will say, calculate the donation tax implication for Mr. X. Assuming that these cumulative donations to date amounted to 27 million. So if the current donation will not put, or maybe they say the cumulative amounted to 1 million, and the current donation will not push the donation to beyond 30 million. The examiner there is saying your donation tax liability should be calculated at 20%. You are told there, it's a trap. So if you think that I can use either 25 or 20, you'll be in trouble. The examiner will be angry there that, but we told these people that the cumulative donations does not exceed 30 million. So we're expecting students to use 20%, right? So now I'll be covering both the discussion questions and the calculation questions. So when am I going to use the 20%? Let's say that they tell me that Mr. X donated something worth 20,000 in the current year of assessment. His cumulative donations does not exceed 30 million, and he's a resident. Discuss the donation tax implications. Now that the response to that will be covered, it will be based on coverage. The question can be 5 marks, right? So when they say the 5 marks like this, the examiner knows the sections that are being tested. And they say discuss. You need to start section 54. Mr. X is a resident, therefore liable for donations tax. The student covered the section, he highlighted to us that the person in question is a resident. Then the next thing you say, Mr. X donated. The student indicated that there was a donation that took place that triggered the donation tax. Then you will talk about the taxable donation also, right? And then now when you proceed to section 64, now you want to go and pick the rate. Other sections are going to come in between, but I'm showing you how these sections are linking. Then you say, oh, now, given that Mr. X's cumulative donations do not exceed 30 million, his donation tax liability will, in terms of section 64, be calculated at 20%. There is another section being covered by a student. Then you deserve the whole 5 marks. Okay, that's a CTA answer. If you're simply going to say he donated, he's a resident, donation tax will be calculated at 20%. Your answer is weak, right? So, right, we move on to the second part thing. And then they say, and the 25% of that value to the extent that the value is not taxed under subsection 1. So in other words, any donation in excess of 30 million shall be taxed at a rate of 25%. So 20% will tax AMA donations up to 30 million. Anything extra will then be taxed at what? 25%. Right. Let's say someone donates for the first time something worth 35 million. He has never donated anything. Let's say this is the taxable donation. I'm saying taxable donation because that's the one in which you apply the rate. How we get to taxable donation, it is going to be explained. Right. So you are going to say donations tax, open bracket, 20% multiplied by 30 million plus 25% multiplied by, to the extent in which the value was not taxed under A. This is your section 64A1. So you see that we taxed only 30 million. So what was not taxed under section 64A1 is the 5 million, which is calculated by saying 35 million minus what is taxed in A1, 30 million. There you get your answer. If it's 10, you write 10. This, you can quote your section there, section 64A2. In a discussion question, this one, you'd say that now, the taxable donation of Mr. X exceeds 30 million. Therefore, the donation tax will be determined as follows. The 30 million shall be taxed at a rate of 20% in terms of section 64A1. And the excess of the donation above 30 million, which is an amount of 5 million, shall, in terms of section 64A2, be taxed at a rate of 25. You have answered it full. Right, so that's how you're going to be using those rates. That's how you will be making use of the legislation that you went through. Right, then we move on to this one, section 55. Section 55, it says definition for purposes of this part. So always read the heading, even when you get to your act there, because it will help you in trying to figure out what are they saying, should you start wondering inside a paragraph. Okay, so but before I go to 55, I didn't read B. 64B, I'm reading 64B, I left it out. Such a percentage of such value as the minister may announce in the national annual budget contemplated in section 27 of the Public Finance Management Act with effect from the date mentioned in that announcement. So now they are simply saying with this rate of 20 and 25, it can change if the new budget that has been announced resulted in the alteration of this rate. Okay, so but if you ask for exam purposes, what is the rate? You explain the 20 and 25 because that's what is prevailing. The minister hasn't announced any other rate. In 2, if the minister makes an announcement contemplated in subsection 1B, that rate comes into effect on the date determined by the minister in that announcement and continues to apply for a period of 12 months from that date, subject to Parliament passing legislation giving effect to that announcement within that period of 12 months. Okay, now they are simply telling us once more that this rate may change as the minister might announce a new rate. Right, so that one is done, 64. Then we jump to 55 now. It gives us the definition for purposes of this part. So now we are going to hear how the terms for donations tax purposes are defined. Okay, for instance, you had the story of property there and you're wondering that does it really mean land and building? Let's hear what is property and other fun stuff there, the terminology for this section. Right, in terms of section 55, there's a definition for the purposes of this part. In this part, unless the context otherwise indicates, cumulative taxable donation, that one was not defined, but these are the donations that have been made to date. Donation means any gratuitous disposal of property, including any gratuitous waiver or a renewal of a right. A gratuitous, out of the goodness of one's heart. The person did not pay for what you gave them, or they paid a consideration which is inadequate. It would be also a gratuitous, isn't it? If I want to give you my phone, sometimes my phone is worth 1,000. I can say, I know you can give me 100 rand. Gratuitous, goodness of my heart. Fine. Or I can give you for free, also gratuitous. Okay. Or they say waiver. They say you were owing me 10,000. Then I say, you know what? You don't have to pay that 10,000 anymore. I have waived that debt. That will constitute a donation. That will constitute a donation. Right. Okay. Right, we move on. Then we have got the donee. The donee means any beneficiary under a donation and includes where property has been disposed of under a donation to any trustee, to be administered by him for the benefit of any beneficiary, such trustee, provided that any donation tax paid or payable by any trustee in his capacity as such may, notwithstanding anything to the contrary, contained in the trust deed consent, be recovered by him from the assets of the trust. Okay, donee is the beneficiary of the donation. The person who is making the donation is referred to as the donor, right? And it's not defined here because when they started 1654, they defined immediately, right? Then the fair market value, right? Now, the reason why the fair market value is defined here, people, it is because your calculation for donations tax, you depart with the market value of the asset in question, market value of whatever is being donated. Okay, now let's hear what is market value. At first value, you might say, I know it is just an arm's length transaction, but okay, drill it down to donations tax, you might hear something that you have never heard there. You still have to read it. Right, fair market value is defined because our donation tax point of departure is the market value of the item being donated. Right, means the price which could be obtained upon a sale of the property between a willing buyer and a willing seller dealing at arm's length in an open market. So this is the price that the item can be sold for between a willing buyer and a willing seller, meaning that those two people are not somehow connected. We move on. That was it. Then the second part, in relation to immovable property, you highlight immovable property on which a bona fide farming undertaking is being carried on in the Republic. The amount determined by reducing the price which could be obtained upon a sale of a property between a willing buyer and a willing seller dealing at arm's length in an open market by 30%. So that one is the one that can give you a whole lot of problem. Fair market value of a farm in which bona fide farming activities were conducted. It is the market value of that farm reduced by 30%. In other words, a fair market value of a farm in which bona fide farming activities were conducted, good people, it is equal to 70% of the fair market value of that farm. Bona fide means the farm was used for good reasons. It was used for farming purposes. You can have a farm that you are staying in, right? And not doing any farming activities. You donate that farm. Its fair market value will be the market value of that farm. But let's say I've got a farm in which we are conducting some farming activities. That's bona fide. You're using it for good reason. If you donate that farm, the fair market value for donations tax purposes will be the 30% of that fair market value of the farm in question. Right, I hope you understand. We also shall see this one when we do questions. Then what is property? It's been used several times. I think we've mentioned the property about 5 times. Now we have to find out, is it the one that we know from our FAC, land and building, or it is going to be defined otherwise? Here we go. Here we go. Right, it says, means any right in or to property movable or immovable, corporeal or incorporeal, whatsoever situated. That's a property. It says anything there, movable or immovable. So in other words, even money, when you donate money, it shall be deemed to be property for donation tax purposes, etc. Anything that you donate. All right, without wasting further time, we move to number 2. Number 2 was deleted, subsection 2 was deleted, so there is nothing to start with. Right, we go back to our sections. What is does UNISA want us to know? UNISA wants us to know section 58.1. What about section 58.1? It talks about property disposed of under certain transactions deemed to have been disposed of under a donation. Then they say section 58.2, do not study it. So 58.2, not in the syllabus. So let's go there. 58.1. You page through. Right, now, when we get the 58.1, there is a heading. So try to understand the heading. They just try to get a sense of it to say, what are we going to be talking about here? Here it says property disposed of under certain transactions deemed to have been disposed of under a donation. So deemed in text, it means that now we are likening something to something that it is not. In this case, they are saying that now there are certain circumstances where there shall be a disposal of a property, not by way of donation, but that disposal shall be treated as if it's a donation. So under what circumstances? We'll get the answer from going through that section, not from hearing it from the streets. This here, situation whereby there shall be a disposal, not by donation, but that disposal shall be treated as a donation. They will bring in that scenario, they will trigger that scenario in the exam, then they say, discuss the donation tax implication. And if there's no evidence that now you read your section 58, they will catch you. You see 58.1, if you read there, after that bold statement, there is one. So it means that section 58.1, it says, all right, I have to demonstrate this. Okay, now it says, where any property has been disposed of for a consideration which, in the opinion of the commissioner, is not an adequate consideration. So you sold something, but in the eyes of SARS, they say, no, this is not adequate consideration. Doesn't make sense. Is not an adequate consideration. That property shall, for the purposes of this part, be deemed to have been disposed of under a donation, provided that in the determination of the value of such property, a reduction shall be made of an amount equal to the value of the said consideration. Okay, so what are they saying there? Let's see how it works. Let's say you've got a property, it could be a phone or whatever there, remember, with a market value of 1,000, and you sell it sold for 800 rands. Now, the question that might arise there, you are looking at this, hey, this thing has got a market value of 1,000, but it was sold for 800. SARS will look at that and say, was that 800 rand received adequate? They will say, no, it is inadequate consideration. So in the eyes of SARS, they will say, section 58.1 has been triggered there. That transaction is deemed to be a donation. Then, so what? Donation tax kicks in. This person must pay a donation. The seller must pay a donation. Right? That's what it says there at first value. But then there is a provision. So now, which amount is going to be used for the determination of donation? The Act says that, provided that in the determination of the value of such property, a reduction shall be made of an amount equal to the value of the said consideration. So now, USARS, when they calculate the donation, because here, section 58.1 has been triggered. Something was sold for inadequate consideration, it shall be deemed to be a donation. Then the provision says, in determining how much was donated, we shall take the market value. You will hear later in section 62 that the value of donation is based on the value of the item donated is the market value. You take the market value, you say 1,000. Then you say less consideration received 800. Then you say 200. This is the one that is the deemed donation in terms of section 58.1. After that, you can then calculate your donation tax and stuff like that. Right, I'll take you through the framework. So you should be able not to execute the calculation only, but to say and tell a story and respond in the case of a discussion question that the item was sold for an inadequate consideration. Section 58.1 kicks in and deems the excess of the market value above the consideration received to be a donation. So it's done there. If you read, you understood it, you are cleared to go to the next one. So UFIFU2, make sure you cancel it. Right, then we have got these ones. Section 50, Section 7C and Section 7D. All right, so now you can all see that those ones are the odd ones out. There are also some deemed donation, isn't by a connected person. There must be a connected person. So these ones, we'll do them last. Let's do the rest, do questions. After that, they take a break, then we do those last two. And if you know a Section 7C and your 7D, surely you know donations tax, in addition to other sections. All right, then we move on to Section 56. It will talk about exemptions. And then they say, do not study Section 56(1) or go there, you cancel it. Right, exemptions. So now, before we dive into that particular section, so now what we mean now, what is the theory of this donations tax? All right, let's say donation. A donation has been made to people. This donation can be an exempt donation, meaning to say no donations tax will be triggered. Or it can be a taxable donation, meaning to say that now there shall be a donations tax implication for that donation. Donations tax implications. So if you're not able to distinguish a donation from between this donation and that donation, so whatever you're likely to do there on paper is wrong. Right. Now, if a donation falls in the ambit of exempt donation, it means that there's no donations tax. Right. These donations are covered under Section 56. They are listed there. So if they give you one of the donations that are listed in Section 56 and say, discuss the donation tax implication or calculate the donation tax implication, you will tell the marker that it is exempt under Section 56. But you need to state the specific what? Subsection as well. All right. So we'll look at this one first. 56 wants us to cover AMA exempt donations first. So we are going to go through these exempt donations before we can go to the taxable ones that involve a calculation. Okay, so the link can be shared there for those who just joined it. Let me see if I can give you this link so that you can follow. What did I send last time? Not link, but these exempt donations. I think I used two. That list. So good people, the income tax aid, we are all going to buy it. It cannot be over your side. Don't fail because you were stingy with the 500 Rand. It costs 500 Rand. You need it. You definitely need it. Exempt donations. Okay. I've shared something there. You make an effort to see. If you can't see, also you'll be listening to me and get going. I gave you a list of exempt donations. So I'm going to be going through that list. So what I'm going to list and mention now, you also see how I'm going to quote that, right? Are the donations that will not trigger donations tax. You donate. Right, let's move. And this is how you quote it. We are going to start with the one that is sitting on Section 56(1)(a). Which type of a donation is exempt under that section? We go there. Because it says, good people, it says. Right. You see, one is in front of that bold statement, the exemption. Donations tax shall not be payable in respect of the value of any property which is disposed of under a donation. So what do you do there with your highlighter? You in the highlighter, you will highlight shall not be payable. So that is clear that now that what follows there will not trigger any donations tax. Under what we read? 56A, this one first. 2, or for the benefit of a spouse of the donor under a duly registered antenuptial or postnuptial contract, or under a notarial contract entered into as contemplated in section 21 of the Matrimonial Property Act. So what stands out there? This is a donation to a spouse that is subject to either antenuptial or postnuptial or under a notarial contract. It's a donation that is subject to a contract there, right? So they say if you donate to a spouse, and you must know what is a spouse, good people. A spouse is not a boyfriend, a spouse is not a girlfriend, a spouse is someone that you are married to. A spouse is not an ex-wife, a spouse is not an ex-husband. But the question will be now saying maybe he donated to an ex-wife, he donated to an ex-husband. Then you say, okay, it's got something to do with spouse. We did this one in class, it's easy. Exempt section 56(1)(a), get a 0. Spouse is someone that you are still married to. Now the explanation of antenuptial contract, right? Ante means before. So it does happen that people enter into such funny contracts. Someone might say, if you marry me, after marriage, I'll donate this and that. And then it happens that you get married to that person, and then through passage of time, the time that was promised in that contract now, we call it antenuptial. It was entered into before marriage. There was a promise that I would donate after we get married. And then it happens that you marry, and the donation takes place after marriage, right? It was tied to an antenuptial contract. That donation is not going to be subject to donations tax. You simply tell the marker that this is a donation to a spouse and an antenuptial contract exempt under section 56(1)(a). Right, now we come to postnuptial contract. Postnuptial contract is a contract that is entered into after marriage. Right, now you have married. Then you say, I know what, I am going to donate something to you, my wife, my husband, right? Now this is entered into, agreed upon after marriage. You reduce that to a contract, then it becomes a postnuptial contract. Thereafter, the donation happens. Such donation will not trigger any donations tax. It is going to be exempt in terms of section 56(1)(a). Again, a donation to a spouse that is tied to a notarial contract will not trigger any donation tax. So they will tell you whether that donation was subject to an ante, post, or a notarial contract. If they say so, you know that it's a donation that is exempt under section 56(1)(a). So you know that one, you take it, you can go around telling people now that you know it. Right, then we move on to section 56(1)(b). Which donation is exempt under section 56(1)(b)? We dive in. 2, or for the benefit of the spouse of the donor who is not separated from him under a judicial order or a notarial deed of separation. So that is more of a repetition, because a spouse is someone whom you are married to. It is not someone whom you are separated from. It is not an ex-wife. It is not an ex-husband. So now, the B1 is simply says, if you donate to a spouse, that donation is going to be exempt from donation tax. It doesn't make, okay, this one is not tied to any contract. You just donate to your spouse there, not under antenuptial, postnuptial, or notarial deed, then we take it to 56(1)(b). If you donate subject to those contracts, you will quote 56(1)(a). They know what they are doing, they know what they are asking. If you are going to quote 1B when they want 1A, it's a 0. Don't say both of them, they deal with spouse. No. Be careful. Right. So you have learned that one again. So you quote that one. Now know where to quote that one. Section 56(1)(c). Let's find out there. Now, as a donatio moris causa. So a donatio moris causa, good people, it is exempt from donation tax. This is a what? A donation with death in mind. A donation with death in mind. Now, what happens here? This donation normally, when does one think about death when they're about to die? Is going to be qualified maybe as follows. They'll tell you that now, after someone was diagnosed with a terminal illness, he decided to make a donation. Okay, so being diagnosed with terminal illness, someone saw death coming, and they made a donation as a result of them being diagnosed. Then you say, this is a donatio moris causa examiner, it is exempt under section 56(1)(c). Or if someone is taking a risky adventure, you want to do bungee jumping, there is a possibility of you dying. And maybe just before you do your bungee jumping, you say to someone, if I die while bungee jumping here, you have to take over this. There's a death in mind there because you're about to do something that can take your life. So it will be a donatio moris causa. It shall be exempt. So now you have to be careful. That one, there must be something driving someone to believe that they're about to die. And in addition to that, they make a donation based on them believing that they're about to die. Right. Don't confuse that one with the next one. They won't be even half a mark or quarter mark. Section 56(1)(d). Now that one talks about a donation in terms of which the donee will not obtain any benefit here thereunder until the death of the donor. Until the death of the donor. So now how does this one work? This one, it works like this, good people. It's more of a statement. There's no transfer of property at that stage until the death. Maybe let's say I'm talking about my car. I would say when I die, you take my car. Do you take it immediately? No. Do you receive the benefits now? No. The benefits will accrue in future when I die. Is there any driving factor for me, or am I believing that I'm about to die? No. I simply say, when I die, the day I will die. I say this because we all know that we all one day we are going to die. Right? So that one is not going to trigger any donations tax. I hope we are not confusing C and D. Let's check if there's a question. Right, there's no question. Right. We then go to E with me. A donation, 56(1)(e), quote it nicely. A donation which is cancelled within 6 months from the date upon which it took place. That is cancelled within 6 months. You donate to someone, you transfer the property. Within a period of 6 months, you decide to cancel that donation. Say what? Bring that thing that I gave you. I'm no longer interested. They say you won't pay donations tax on that one. But keep in mind that they say that now you would have, you have to pay over the donation tax before the end of the month, following the month in which the donation was paid. If the donation was already paid over and cancelled within 6 months, it means you will get a refund from SARS. Right? So now, but they are not going to tell you in the exam that this donation was cancelled within 6 months. No, they'll give you the dates. He made a donation to his friend, whoever, in February. In April, after they realized that they made a mistake by donating with their car because they still need it to travel to work, they took the car back, discuss the donation tax implications or calculate the donation tax implication, the market value is given and all other fun stuff. It's for you to calculate February and April. How long is that period? Within 6 months, less than 6 months. Therefore, we are talking about the donation that is sitting on 56(1)(e), no donations tax implication. It's an exempt donation. Right. F, made by or to or for the benefit of any traditional council, traditional community, or any tribe referred to in section 10(1)(t)(7). right? If you donate to any traditional council, to any traditional community, or to any tribe, donating to the Ndebele people, donating to whatever people, it's going to be exempt in terms of section 56, 1F. Right, we move on. G, right? We have to listen to G careful there because it can throw you out of the window. Now they say, if such property consists of any right in the property situated outside the Republic and was acquired by the donor, right? And was acquired by the donor before the donor became a resident of the Republic for the first time. So I have to demonstrate that here. Let's say we've got someone there, it's Botswana, and then we have got SA. We've got a Botswana resident. He had a house that he owned in Botswana, but he emigrates from Botswana to come and stay in South Africa. Then he gets the residential status of South Africa. Then they decide that now they won't be going back to Botswana, or they no longer need that house. Then they make a donation of that house. Doesn't matter to whom, to who, remember? This guy is now a resident of South Africa. But before he became a resident of South Africa, he was a Botswana resident. He had a house in Botswana there. He donates this house. Right. He won't be liable for any donation tax in terms of section 56, 1G. Because he acquired this property before he became a Botswana resident. Sorry, before he became a South African resident. So this section says that he won't be liable for any donations tax. You quote that section, or you describe and then quote. That's one. Now, what about what is sitting here? Let's find out. Right. So you go back to G again. If such property consisted of any right in the property situated outside the Republic and was acquired by the donor, this time you jump straight to 2. And was acquired by the donor by inheritance from a person who at the date of his death was not ordinary resident in the Republic, or by a donation, if at the date of the donation, the donor was a natural person other than a company, not ordinary resident in the Republic. Right, it's very simple there. Okay, so now the next concept that we have there that calls for us to interpret is the issue of when they say other than. Okay, in text, good people, we have got 2 persons. For now, let me say we've got 2 persons. We have got a natural person and we have got a company. You will see this a lot in your Income Tax Act. So now, when we say other than a company, given that we've got 2 persons, in other words, if we are to use a direct talk, we'll say natural person. So that other than a company means natural person. If we say other than a natural person, we are saying a company. There's left and right here. If I say not left, I say I'm meaning right. If I say not right, I'm meaning left. But they write it in such a way that now interpretation can become very tricky. So, all right, so now what are they saying there? They say, again, the issue of Botswana again, this guy here. There is this property. This guy immigrated from Botswana to become a South African resident. Now they are saying in that section, subsection 2, if this guy owned a property in Botswana before he became a resident of South Africa, that was donated to him by a person who is a non-South African resident. This person is a resident of Botswana. He donates this house to this guy, and this guy now emigrates to stay in South Africa. They say, if this guy later donates now this property, there will be no donation tax implication because he acquired it from a non-resident. So you see that chain. So you'll be trusting this from their English, given the scenario. That, okay, A is now a South African resident, having emigrated from Botswana in 19X. A had a house which was donated to him or acquired by him from B by way of inheritance. B was never a South African resident. A donated the house to C. There shall be no donations tax implications for A because the house so donated was acquired by him from B, who was never a South African resident. In terms of section 56(1)(g)(2), no donations tax implications apply. You go scot-free, get all your marks, you go home. Right? Then there's 3. G3. G3, it says now, you go back to G because G is universal. It covers 1, 2, 3. So G says, if such property consists of any right in property situated outside the Republic and was acquired by the donor, right? We go to 3 now. Out of the funds derived by him from the disposal of any property referred to in G1, the one that he acquired himself before he became a resident, and 2, the one that he acquired from the donor, who is a non-resident. If the donor disposed of such last mentioned property and replaced it successively with another property, all situated outside the Republic and acquired by the donor out of the funds derived by him from the disposal of any of the said properties out of the funds derived by him from the disposal or from the revenue from any of those properties. Right, a whole chain. Same story. So what they are saying there, good people. Let's start with this one first. And they said 1 and 2. Let's start with this one. With this guy, he was a Botswana resident. He had a property that he was owning in Botswana. He donates it. He went to South Africa, became a resident here. Then he decided that I want to be going back to South Africa. He donates that property. So that was covered in A. But what 3 now says, it is not this property per se that is donated. This guy now sells this property and donates the proceeds. Still, those proceeds will not be subject to any donation tax because they are tied to a property that he owned before he became a resident. They also say again, if it disposes of this property, buy another property, even though he is now a South African resident, using the funds, proceeds received from this disposal, and later donate the property so acquired using the proceeds of that property that he owned before he became a resident. They say still not donations tax implications. Same goes for if he acquired it from a non-resident and he decides to sell it and donate the proceeds, or decides to sell it, acquire another property, and then donate the later property then. They say not donations tax implication. So you will trace this in the scenario. Right, men marking the examiner, making sure that you are not left behind, understand the chain, trace it. Right, 4 was deleted, we don't worry about it. 5 was deleted, don't worry about it. GA, we deleted, we don't worry about it. Then we come to H. Now, pay attention to this one. It may throw us out. Now, what we having here is this. They say, buy. Remember, we talk about the exemption, everything that we've been covering, we say those donations are exempt. So buy or to any person, including the sphere of the government, referred to in section 10(1)(a), C cap A, C cap E, C cap N, C cap O, C cap Q, D, or E. Okay, so I'll cover that one. So when they say sphere of government, the sphere of government can be at provisional, at district, at council level. So if it donates to the government, be it the municipality, be it the council, be it at district level, there shall be no donation tax implication. But will the question ever say he donated to the municipality, he donated to the council, just like that? No, it'll be too general. They can simply say that he donated to a Tshwane municipality, Joburg municipality, and stuff like that. So it is for you to see that now, oh, this is a municipality, it's a sphere of government. Don't say we didn't do donations to Tshwane, within 2 donations to Joburg municipality. Is it? That would be now application in this scenario. Exams about application. Right. Let me check if there are any questions. Okay, no questions. All right, so, and UH again, you see those subsections that are listed there. One of them, when you finally get to act, you have to go through 10.1a, C cap A. But one of them also, this is to the government and public benefit organization. Registered PPOs, registered. So if you donate to a public benefit organization, there shall be no donations tax implications. Section 2 court, section 56(1)(h). Section 56(1)(h). If you say I donated a donation to public benefit organization, then you say exempt. Your answer is called. When no calculations are performed, whether they say make reference to legislation, you still have to make it. Because if you just tell us that it's exempt, here we don't calculate. Now, you leaving us wondering is to say, where is it getting this from? Even if we know that it's there in the act. The fact that we did not quote where you don't calculate, you have to quote a section. Even if they didn't say that make reference to legislation, you quote. All right, we go, good people. Right, after H, I was deleted, K was deleted, fine. We go to K. When are you going to quote this section? Remember, these sections where we are going to be quoting them. I'm going to show you when we do questions how you do the quoting part of it. Okay. And as we go through, make sure that now the purpose of the class is, good people, is to build a memory base from which we'll be retrieving our responses to questions. We are not just going through this because it's a boring Friday or what. You will need to use this. You need to go get this and apply it in the question. Okay, right, we move, good people. It says, as a voluntary award, the value of which is required to be included in the gross income of the donee in terms of paragraph C, D, and I of the definition of gross income in section 1, or the gain in respect of which must be included in the income of the donee in terms of section 8A, 8B, or 8C. Okay, you do those section 8B is part of the 8C is the one that is in the syllabus. Okay. So here, if voluntary award for people, you may volunteer during this COVID-19 story, you volunteer there, the treatment of patients and stuff like that. Then they say, you know what, for volunteering here is an award. It's a donation, maybe you're given to that, maybe you're helping a private doctor there. Then it gives you an award, volunteer award for volunteering, thank you for your services, here is this. So now whether that donation will be taxable or not, we need to take a step back and think, will that property that he received from the donor there be included in his gross income or not? It will determine whether the donor or the giver will be liable for donation tax. If we're told that now, okay, as a voluntary award, he received this and SARS will tax this in his hands, then we see that, okay, it's going to be taxed in his hands, so it cannot pay donation tax again. So we say the donor will not be liable for donation tax implication because the donee, because the value that was received by the donee shall be included in the donee's gross income. So we go and look at the other side, whether the donee will be taxed in on that property or not. So don't claim a voluntary award and say, once I hear voluntary award, I say exempt. No. Focus on, will the donee, will the recipient of that voluntary award be taxed on what he received? If the answer is yes, then no donation tax implication for the donor. If the answer is no, SARS is not going to tax whatever he received, there's a voluntary award in his hand. We will have to calculate. Right. So remember, we are focused on both calculations and discussion. Right, we move. L, if such property is disposed of under and in pursuant of any trust, under or in pursuant of any trust. Right, so this is going to be a donation by a trust there. If you donate on behalf of a trust, they say that there will be no donation tax implication. The property belongs to a trust and it is being donated, not that when you donate to a trust. When the property leaves the trust by way of donation to a third party. Okay, no donation tax implication. Which sections do we quote? 56(1)L. Right, another tricky one. M, 56(1)M. When are you going to quote that section? Because people, you are going to be quoting this section, right? You are going to be quoting this section. This one. When should the student quote this one? You have to listen carefully there. It says now, if such property consists of a right other than a fiduciary, usufruct, or other like interest to the use, the right of use, to the use or occupation of a property used for farming purposes. You highlight farming purposes. The right to use or occupation for farming purposes, for no consideration, or for a consideration which is not an adequate consideration. And the donee is the child of the donor. So what do we take out of that? If someone donates the right to use or occupation of a farm that is used for farming activities to their child, or that right of use is sold to the child for an inadequate consideration, then there shall be no donation tax implication. Understand the whole paragraph. They don't just take a corner of what you want to hear. Everything. Because that's what we are going to be discussing in the exam. So, okay, he's donating a farm to their child. He's donating the use of a farm. So you're saying to your child that, yeah, you can use this farm for now. That's donation also. We are able to calculate the value of that. Right? But for the purposes of this module, they say that the value of use they will give you. After that, they say it donated this to their children. The value of use or enjoyment by the child is determined to be 2 million. And then they say this farm, in which the right of use was granted to the child, was used for farming activities or farming purposes. It qualifies there. But if they say, because he was not using this farm for anything, he decided to donate the use of the farm or occupation of the farm to their child. It wasn't used for farming purposes. So therefore, we are going to calculate our donation tax. We cannot say it's exempt in terms of section 56(1)M. Right. So it is these small things there that are going to actually give us a very big headache. Small but big headache. Right. Then we move on to 56(1)N. When do we quote it? On or after the 7th day of August, 1966, by any company which is recognized as a public company in terms of section 38. So there are things to highlight there. Public company, section 38. So what we are saying there is that if a public company makes a donation to people, there shall be no donation tax implication. And the section to quote there is 56(1)N. Right, do not do or. It is not in the syllabus. In case you've forgotten, we are seeing it here. Not in the syllabus. Right, P, deleted, Q, deleted. We go to R. By a company or by a company to any other company that is a resident. That is a resident. And is a member of the same group of companies as the company making the donation. So what are we taking out of that? Donations by companies in the same group, right, is not subject to donation tax. But that company, that recipient of the donation should be a resident company. If they say maybe Telkom has got a subsidiary or has got shares in a Botswana company, and they made okay, more than 50%. So they are in the same group there, and they donate to that Botswana company there. Don't say it's exempt in terms of section 56(1)(r), because now, yes, they are in the same group, but the recipient of the donation is not a resident. Section 56(1)(r) would exempt a donation amongst the companies that form part of the same group, provided that they are what? The donee, the recipient, is a resident. Right? Sharp. Right. So we have covered exempt donations. So the donations that we're going through, there could be more in that one. Right? One. We have done one so far. They are not going to trigger any donation checks. So 56, one, it's this one. This is 56(1). Right. No donation checks at all. You turn the marker, you quote the section, you proceed. Now, let's come to section 56(2). Right. Now, section 56(2), it says that now for taxable donations, it applies to taxable donations. It applies to taxable donations. Right. So with section 56(2), it will allow us to be in a position now to calculate the taxable donation. Yes. So with section 56(2), it is going to give us the portion of the donation that is exempt. The portion that is exempt. Right. So we have got the portion for the company. This will find it in section 56, but you have to listen to me carefully when I explain it. 1A, and we have got a certain portion for the natural person or a person other than a company. Natural, me and you. There is a portion of the donation of the value so donated, provided that is a taxable donation. Section 56. Well, this is 2, not 1. Good people, we're now on 2. 2B. That general exemption that you know of, the 100,000. I'm not going to write anything for that company there because it has got some subject to rules. That 100,000 per annum and not per donation. It's a portion of the value so donated. For instance, you donate something, you're a natural person. You donate something there. Donation of a car with a market value of 700,000. Let's say you did not donate to that person who is exempt in terms of section 56(1). We'll come here, good people, and say section 56 2B, the general exemption of 100,000, assuming that this is the first donation, then we get our 600,000. These, good people, is the one that we call taxable donation. After that, we can then determine a donation tax at either 20% or 25%, depending on the circumstances in section 64. You work it out. So now we know how to go to the taxable donation for natural person. It is the value of the donation. If value, you will see that is given in terms of section 62. It's the market value. Less any exemption that apply. Then you get a taxable donation. Then apply your rate. Right, so we put there. Now let's dive into it. You have to listen carefully, good people, because now the questions, they will be searching your understanding. If you're a chance taker, you will be just indicating that you once attended classes, but you were not fully involved because you've got an idea, but you're losing someone. And if you are like that, the examiner will not have mercy on you. He's going to fail and say, the children still have to go back and top up what they have. They are in the right track. Then now you've got a whole year of repeating. Okay, let's start with the first one, the one that applies to companies. Section 56 2A applies only to companies. It gives us an exemption of 10,000 on casual gifts. Casual gifts. A casual gift, good people, it is a gift donated by company. Gift donated by a company that has a value of less than. That is for the value not exceeding. Now in text, we say not exceeding. A value not exceeding 10,000. So if a company makes a donation and the value of that donation does not exceed 10,000, we will refer to it as a casual gift. And up to 10,000 of that particular gift shall be exempt. Right, let's dive to it. Donation tax shall not be paid in respect of. So you can highlight shall not be paid. So this 56.2, it gives us the portion of the donation that will not be subject to donation tax. That will not be subject to donation tax. Okay. Right. Let's dive to it. 2, donations shall not be paid. Donation tax shall not be paid in respect of A, so much of the sum of the values of all casual gifts. You highlight all casual gifts made by a donor other than a natural person. Highlight other than a natural person. When we say other than a natural person, we're saying company. But you are not allowed to write in your act there. Otherwise, you could have replaced that with company. So it just highlights person during any year of assessment as does not exceed 10,000. Provided that where the year of assessment exceeds or is less than 12 months, the amount in respect of which the tax shall not be payable in terms of this paragraph shall be an amount which bears to the 10,000, the same ratio as that year of assessment bears to 12 months. So if the company makes a casual gift, donation to XXXX, maybe 7,000. This is a casual gift. You quote here, section 56, 2A. You come and say it's 10,000, but limited to the actual donation, which is 7,000. Then we have got a taxable donation of nil. But still have to say what? Donation tax at could be 20%, could be 25%. You quote your section 64, then you show us it's nil. You still have to proceed. Even if a taxable donation is nil, you still have to proceed and show the percentages, because that tells the marker that it's not like it's exempt in terms of section 56.1. It is a taxable donation, just that the value to tax there has been eroded by the exemption to nil. It must be a casual gift. The value so donated must be a casual gift. It must be less than 10,000. If it was 17,000, we're not going to allow for this. We go straight and tax the 17,000. Highlight 10,000. Okay. I know it undergrad, that one was not there. Then we go to this one. This you are familiar with because at undergrad, it was part of the syllabus. It was part of the syllabus. We refer to it as the general exemption. It only applies to natural persons. It is an amount of 100,000 per annum. So what is SARS saying there? SARS is saying that now you can make donations of up to 100,000 during any year of assessment and not pay any donation tax, because that taxable donation will be zeroed by the annual exemption, the general exemption. But it is per annum. Don't apply it for each and every donation. This is per annum. All right. Now let's look at this gentleman here. Maybe donation to cousin. Remember, donation to cousin will not be exempt in terms of 56. If it was to a spouse, we're going to quote there. Maybe it is an amount of 800,000. Then you quote your section 56 to B. 100,000 of that donation, assuming it is the first donation, 0, giving us a taxable donation of nil, making the person liable for donation tax at 20% or 25%. Where are you getting this? You quote your section 64, and it's going to be nil. That's one scenario. Let's say, however, this person makes 2 donations. Donation number 1. It is an amount of 80,000. The natural person. Section 56 to B. It is an amount of 100,000. But in this case, we say limited to the actual donation because you cannot exempt more than the donation itself, giving us a taxable donation of nil. Then you still have to show it donation tax here because there will be marks. And you still have to quote your section where you're getting these rates. Okay, on that donation in the morning. Same person again donates in the afternoon. Remember, donation tax is payable per donation day. Number 2, let's say now he donates to a cousin something worth 60,000. Right, it is in the same year of assessment. Now you come here and say section 56 to B exemption. Right, the one that is left now is going to be 100,000 less what has already been utilized, 80,000. So the section 56 to B exemption that is remaining is now 20,000. It is the one that will then be applied to reduce the property so donated in arriving at taxable donation. Then we say donations tax at 20% or 25%. We get this from section 64. Then you put a number there. The 20% or 25% of that, depending on the circumstances that apply. Right. That was your B. I take you through B now. I was just telling you B to prepare you what you will hear. So let's dive now to our act, because you mustn't hear things from me. Yes, hear them from me, but know where they are in the act. Because you cannot make reference to me in the exam. I've never written any act. Right, it says, so much of the sum of the values of all the property disposed of under donation by a donor who is a natural person. I like natural person because in the exam, a lot of things happen. You can find yourself applying 400,000. Who is a natural person, S does not exceed during any year of assessment. S does not during any year of assessment exceed 100,000. Right, the application has been demonstrated to you. It is not repeated here. Right, we move on. C, now what is exempt there? So when you are reading this 2C, good people, you should be more of an inquisitive person to say, let me go and find out what is the story about 56 2C. We're there now. Right, here's the story, could be. Here is the story. What is the story? It says so much of any bona fide contributions made by the donor towards the maintenance of any person as the commissioner considers to be reasonable. Okay, so now this talks about the donation for what? For bona fide maintenance, for a good reason. You do this every day. Even today, you're going to make this donation to your children. This is a donation for bona fide maintenance. It's for a good reason. For instance, when you pay school fees for your child, that's a donation. But you have never paid any donation tax. Why? Because SARS consider it to be for bona fide maintenance. You buy your children food. They're getting something for free, so it's more of gratuitous. It's donation also. But why is that you've never paid any donation tax? Because it's for bona fide maintenance, section 56 2C. Bona fide, good reason. But now what about when you buy your child a car for their birthday? Is it for a good reason? For maintenance? Does one need a car to live? No. So that will not be considered bona fide maintenance. Donation tax implications will be triggered. You have to pay donation tax. I didn't say anything that you do for a child is exempt in terms of that section. No, anything that you do for a child, that is considered to be for bona fide maintenance, for their maintenance, for their upkeep. It's not about child only, but for any other person's upkeep. But now here's the thing. That person should not be in a position to what? To maintain their own self. Let's say you've got a parent who is 55 years old, maybe you can say, okay, now the person is old. But if they are working and they're able to provide for themselves and donate something to them, that will not be considered bona fide maintenance. They are able to maintain themselves. You'll be liable for donation tax. You will be liable for donation tax. I hope we understand. Read the question careful there. Here, it's tricky because they want to get you. So now undergrad, that you go and vomit everything that you read a day before, and then you survive just like that. No, it's not like that, good people. As you study further, remember this is now CTA, you're just 3 exams away from being a CA. So if they don't put in place checks and balances, they shall be CA clad in South Africa, then that would be a problem. And they don't feel bad when they fail you at CTA level, because you are actually a threat to them. Soon you'll be like them, crowding the employment, what. All right, so there we go, good people. So now where are we? We go back to what Sar saying, to what Unisa said we must start. Right, now we go to 57A. So now these ones are short. Let's quickly do these ones. We'll take a 5 minutes break while I look for questions. We come back, we apply this. So now the answers should be coming from the floor because I've told you the right. I've told you if you calculate or you don't calculate. So it should be easy, won't waste time there. Thereafter, we go to those 2. Our next class, first 30 minutes, we close it off. Focus on something. Life goes on. Right, 57A. So first read there. What are they saying? And try to figure out. It says, donation by spouse married in community of property. Right, you've got an idea of that one. So don't read the heading and conclude, I know I don't have to go there because this one I know it. Okay, so just as a tip there, if 2 people are married in community of property and one makes a donation, they are deemed to have donated equally. They can say A and B are married in community of property. Then they say A donated an amount of 1 million. Remember, the donate down there should be someone who is exempt in terms of section 56. Otherwise, say exempt. Donated an amount of 1 million. Then they say calculate the donations tax for B. Donations tax for B. Hey, you go through that question one more time and say B did not donate anything. There's an error here. You call the invigilator. They phone wherever the examiner is. Say, hey, students are saying there's an error here. Then the invigilator, the examiner simply say, well, what is busy with other things? They say, no, they should write terms. We'll adjust the marking. Only for the marker to get disappointed that there was no error at all. The students just did not have the principle. So if they say calculate it, remember your calculation should be communication also at this level. You simply show them that donation by B, section 6.2. When I quote section 6.2, I'm giving the value. And then I also say section 57A. I'm communicating with the marker. Marker knows that, okay, so the student is giving me the value, which is going to take the market value presumably, if you do the right thing. Then 57A, the examiner says, okay, the student is telling me that these people are married in common property and he's going to show me the share for the other spouse. In this case, it'd be 500,000. We see you dividing. That's what we are going to hear when we get to 57A. Thereafter, you go with the stories that I've taught you. Okay, provided that this 1 million is included in the joint estate. If they tell you that the 1 million was not included in the joint estate, then you say IUP does not have any donations tax implication because section 57A does not apply on the donation that was made by A. So it means that the implications will apply on 1 million on the donor being A. So let's go there, because you need to know the source of these things, not to hear it and say we did it in class. No, not in terms of the class that we had, but in terms of section 57A, they are deemed to have donated equally. We share. Right, donation by spouses married in community of property. For the purposes of this part, in the case of spouses married in community of property, you're highlighting the in your act, in community of property, where any property is disposed of in terms of the donation by one of the spouses. And so if you quote here, like for instance here, if the property in question is not excluded from the joint estate, I would say 1A. So if we mention A, the marker knows that, okay, this property is not excluded. Let's find out A. And such property falls within the joint estate. You highlight joint estate, within the joint estate of the spouses. Such donation shall be deemed to have been made in equal shares by each spouse. Okay. OP will tell you what happens if it's not included in joint estate. And in that case, you will quote section 57A, 1B. If it's not included in the joint estate. Such property was excluded, you highlight excluded from the joint estate of the spouses. Such donation shall be deemed to have been solely made, by the person making the donation. So you calculate it under the person who made the donation without dividing by 2. Easy. Right, we go to 57. Remember, they know what is in the syllabus. Remember, they know what they said you should start. As such, they will test you on that. Don't say, oh, the examiner remember that corner section. Yes, they will. Right, now 57, it says, disposal by companies under donation at the instance of any person. Right, as I proceed to section 57 then, I'm going to get an answer to what? To what happens if a person instructs a company to make a donation. Here is a natural person. They will say a natural person, they shortly shall hear it. He gives an instruction to a company that yay company donate an amount of say 1 million. So now what section 57 is going to tell us is, they will tell us who will be liable for donation tax on that 1 million donated by the company. Is it going to be this guy or the company? We'll get an answer to that shortly. Right. So what do we do? Do I tell you? No, I don't tell you. I go and show you where it is, because this is now lifelong learning. I'm not just impacting this knowledge for you to cram, download, and move on to the next level. You might not move on to the next level until you incorporate this knowledge as lifelong. It stays with you. You are not writing tomorrow. If I just tell you that, no, it's going to be the company that is deemed to have donated, it's going to be the person that is deemed to have been donated, I'll be robbing you with people. Will you still be remembering me on this day in October? No. But if you know where to get it, in case you're forgotten, you'll be able to survive. 57, disposal by companies under donation at the instance of any person. So that one, at the instance, it means that the person is going to give the instruction. Right. Now, if any property is disposed of by any company at the instance of any person, and that disposal could have been treated as a donation had that disposal been made by that person, the property must, for the purposes of this part, be deemed to have been disposed under a donation by that person. So this mention of that person, that it is the person that is giving the instruction. Right. So they never said natural person here. So you can be wondering, they never said natural person, but he drew a person there. The instruction can only be given by a natural person, isn't it? So we can't have another company giving an instruction to another company. No. So who is liable here? If you look at OB there, there's a mention of that person. This is the person who gave the instruction, and they say that it is deemed, you highlighted deemed now. It shall be taken as if it is this person who made the donation. So the donation tax liability on this 100 million shall be taxed, shall be payable by this person, let's say person A. So now how will the exam come like? They'll give you that scenario. He instructed the CEO, he instructed the company to make a donation, calculate the donation tax implication for the company. You heard that the money came from the company. Then you go and calculate. In that case, could be what I'm going to do. You say, section 57 apply here. Mr. A, the CEO or whoever, the one who gave the instruction of donation, is the one who is deemed to have been donated. We have donated. Therefore, the donation tax implication of the 1 million donated by the company shall fall under the what? Under A. The company is not deemed to have donated, or not donation tax implications for the company as section 57 apply. Then you go and calculate under A. Could be a calculation, could be a discussion period. That's how the questions will come like. In case you're wondering, how will the question come like? That's how they will come like. So, all right. Right, it was short and sweet. Then we go to 62. With 62, I've said it several times. It gives us the value of property disposed of under donation. Right, it's straightforward. The value is the market value. So any property that is disposed of under donation could be for the value is the market value. Remember, you wouldn't have paid anything, or if you paid anything, then you apply your section 58 there to say that portion it to be in adequate consideration. All right, we move. What is the story here? So if value is section 62, so where are you going to use section 62? In your calculation, right? Let's say someone donated. You can say donation to whoever, section 62. Right, once you are saying section 62, what we need to see here could be is the market value. You'll be told about the cost, you'll be told about the carrying amount, you'll be told about the tax base. Section 62 says the value is the market value. So you quote a 62 there, telling the marker that I'm using the market value, it is the one that is deemed to have been donated. Then you can come with a whole lot of funny things there. That also we have learned. Right, so I'm not going to take you through that. It's going to be a repetition of what you already know. Right, 59, persons liable for the tax. I will take you there. Right. At undergrad, you will simply say, the donor, end there. The donor is liable for donation tax, but if the donor does not pay the donation tax to SARS within the stipulated time frame, then both the donor and the donee become jointly liable. So if someone donates something to you, people tell them to pay over the donation tax to SARS, or else both of you will end up becoming liable for donation tax. Both of you end up becoming liable for donations tax, right? But you don't have to quote me as the what? as the source of such information, you get a 0. I will go and show you where do you find this. In your exam, you quote from the act, not from me. If I just say this and move on, I will be saying that you can go and use a strict talk to answer questions, which would be wrong. No, the source, these books, you go with that book into the exam and not with me, isn't it? So no way to get it from the book. Don't make an effort to remember me saying it, just know where to get it. Right, 59, we go there. Those who haven't bought the book, please, when you buy it, you will go through it the way I've been doing, and it'll be making sense to you. Right, it says, persons liable for the tax. The person liable for the donation tax shall be the donor. That's the default. Provided that if the donor fails to pay the tax within the prescribed, within the period prescribed in subsection 1 of section 60, the donor and the donee shall be jointly and severally liable for the tax. So the default is the donor, but if the donor does not pay within the prescribed period, you see now, when they mention this period in section 59, it appears to be a mystery. But we all know, I've told you, that you should pay it over to SARS before the end of the month, following the month in which the donation was made. But we are going to hear that in section 60 as well, right? So now what happens is this then. In the exam, they are not going to say, hey, the donation tax was not yet paid over to SARS before the end of the month, following the month. They'll tell you, we donated in February. By March, the donor hasn't paid the donation tax, or by March, the donation tax hasn't been paid. Discuss who is liable for donation tax. Then you will say that now, the donor, in terms of section 59, is the person that is liable for donation tax. However, if he fails to pay the donation tax within the prescribed period, which is the end of the month following the month which the donation was made, both the donor and the donee become jointly and severally liable. In our scenario, or in the scenario given, the donation was made in February, and by April it hasn't been made. It hasn't been paid over to SARS. Therefore, both the person now, the donor, person A, and the donee, person B, are now jointly and severally liable for donation tax to SARS. You are training to be a tax practitioner. When you are providing tax advice, you are not calculating anything. You are just telling your clients, they have come forward, I've got a situation here. Please assist me in knowing my position. You are not going to say, secretary, bring the calculator. No, you should be able to talk, should be able to communicate, you should be able to answer questions, you should be able to discuss questions. So they are training you for that. So be ready to discuss than to calculate. Because if you can discuss, then the calculations are automatically. So calculations now at this stage, normally they come as support mechanism. So you cannot cross the 50% mark using the support mechanism. So discuss supported by calculation. Then you go and dwell on your calculations and feel like you've totalized. Did you answer the question? No. Where's the discussion? So without discussion, they may choose not to answer. So no, the calculations are supposed to be used as a support mechanism to the discussion, and the student did not provide the discussion. We move. Payment and assessment of the tax. Now, two things they are covered. Payment, right? By when? Assessment. How do we do it? Is there any donation tax here of assessment? We shall hear in section 60. Let me not just tell you so that otherwise you hear it as a room. Now, payment and assessment of the tax. That's my section 60 now. There. It's now saying donation tax shall be paid to the commissioner by the end of the month, following the month during which a donation takes effect, or such a longer period as the commissioner may allow from the date upon which the donation in question takes effect. So don't worry much about the one that comes up. But so we have heard that by the end of the following month in which the donation took effect, you should have paid the donation tax over to SARS. But then they put the commissioner story. That story is simply there that, okay, maybe they say you don't have money, you can apply to the commissioner to say, can I pay donation tax maybe 2 months down the line, stuff like that. The commissioner has got the power to say, yes, you can do so, or no, you can't. But for example, purposes, when you're asked, when must it be paid over to SARS? By the end of the month, following the month which the donation tax was paid. But if you are given the date that the donation took place, we all know the month after that. Mention the month after that. Or else they will simply say that's theory dumping. Next page, that was 1. If you turn over, you've got 62. Now, each section and subsection could be, it is standing there for a purpose. Don't just read maybe 61 and go home and say you're done with section 60. You're not done with anything there. Do you know what is sitting in 2? Do you know what is sitting in 3? Can you tell us what is sitting in 4? Can you tell us what is sitting on subsections 5? Find out that you are blank. Read everything. You know shortcuts, people. Now, subsection 2 of section 60. Where a donor is during any year of assessment disposed of a property under more than one donation and in respect of which an exemption may be applicable under the provisions of section 56(2)(a) or b, the amount to be exempted in respect of any such donation shall be calculated according to the order in which the donation took effect. I demonstrated this, that you donate in the morning, apply your 100 first there. If there's anything left, then you of your exemption, then you apply it on the next donation. We are hearing it, we heard it about it, we saw it in action, they are reminding us, yeah. So honestly, having said these things many times and repeating them, even if you are a slow learner, you will pass. 3. Where a donor is disposed of property under more than one donation on the same date, those donations shall, for the purposes of determining the tax payable in respect of each donation, be deemed to have taken effect. A, in such order as the donor may elect, or if the donor fails to make an election within 14 days after being called upon by the commissioner to do so, in such order as the commissioner may determine. Straightforward. They are saying if you make 2 donations, more than 2 donations in one day, you can choose the deemed order of donations. For instance, donate in the morning, you donate in the afternoon. You can say, for the purpose of donation tax, let's take donation number 2 as if it was made first, and the one that was made first as if it was made second. For the purpose of applying your section 56(2)(a) exemption, it's allowed. But in the absence of you exercising your right, we apply our exemption in terms of the order in which the donations were made. This is just a provision, right? Now, number 4, the payment of the tax in terms of such section 1 shall be accompanied by a return. So what do we mean by that, good people? We are saying there should be a return. There should be a return that you complete. You have to complete a form the same way you do your what? The same way you do your income tax returns. It's not like you say, now that you know how to calculate donation tax, you simply calculate donation tax and you run and deposit the money into what SARS account. No, complete a return. 5, the commissioner may at any time assess either the donor or the donee, or both the donor and the donee for the amount of donation tax payable, or where the commissioner is satisfied that the tax payable under this part has not been paid in full, for the difference between the amount of the tax payable and the amount paid, but the payment by either of the said parties of the amount payable under the assessment shall discharge the joint obligation. Right, so that's how now things get tough. Yeah. So what are they saying there? It's still talking to the donation tax liability, who is liable. Now, in your discussion, you should be able to tie you should be able to tie with section 59 and section 60, subsection 5. Because they talk about who is liable, both of them. This is the default, the donor. But if it does not pay within the prescribed period, both of them, they leave you there to forget. Then they appear again in terms of section 60, subsection 5. So they are saying the commissioner has got the power to assess anyone whom they want, the donor or the donee, for donation tax. So if it comes as a long question to say, discuss who is liable for donation tax, 10 marks. If you're going to sit only on your 59, SAP in January. It's 10 marks obvious, you need to write a lot. You also have to go there. Who 59 is saying this, and that. 60, however, also gives the commissioner the power to assess either the donor or the donee for the amount of donation tax. Or section 60, subsection 5, it gives the commissioner the power to assess either the donor to the power to request the payment of the shortfall of any donation tax from the donor or the donee. So this one will address the issue of the shortfall, if there's a shortfall. Maybe a donor, yes, is liable for donation tax. The donation tax was 100,000, and the donor only pays 80,000. So section 60, subsection 5, it says the shortfall of 20,000 can be demanded by the commissioner to either the donor or the donee. So people, when you're writing now, when you're starting, it's section after section. When you're writing now, you need to remember how you put together all the relevant sections. You see as you progress, at one point you'll be required to touch something here on donation tax, section 50s, and go and tie it to another section in section 100. So if you don't understand as we go, you are actually creating a very big problem. Right. So donation tax, I'm not going to touch the other part 4. So today, unfortunately, this one we're not going to be able to do it. We'll see. Okay, we said 9:15. But before we go to that one, we need to do some questions. So the rate at which you respond to the questions will determine if we're able to proceed to that one. So yes, we have to. It's a free class so that you benefit. Even if you don't come, at least you would have learned something. Then this one will be a topic for another day. Right. Now here's a question. Do these people want break or continue? All right. Do we want a 5 minutes break?
Yes, please.
So,
yes, please.
Right. You don't have to log out. You remain online. You take your 5 minutes break. Then at 20 to 9, I'm starting with questions. The questions, I'm going to look for them and share them in the group right away. See you at 20 to 9. Remind me to record when you come from break. Okay, we have good people. While I'm sharing questions here, I'm seeing there's a hand up there. You can go ahead and ask.
Hey guys, can you hear me?
Yes, loud and clear.
Okay. My name is Eddie. I'm just trying to inquire if, okay, specifically regarding section 56(1)(g. All right.
Yes.
Where we were talking about somebody who would have, would normally have been a non-resident, then moved into South Africa and became a resident, and donated his property from outside of the country.
Yes.
To a resident. All right. So I just wanted to check with you. Does this relate specifically only to immovable property, or because I was I was trying to inquire specifically if he got a vehicle, maybe a car that he brings into South Africa, all right, and donates to a South African resident, all right. Would that still be, would there still be an exemption on the vehicle, or is treated separately? Or maybe this one is only talking to immovable property.
Okay, where will that property be? You said they brought the vehicle here.
Yeah, let's say if they bring the vehicle here and maybe donate it to a resident.
Right. When you read the G there at the beginning from the onset, it's quite clear. They say if such property, right? When they say property, they did not say movable what, but they're talking about property in the general sense, meaning what? The definition of property. If such property consists of any right in property situated outside, so you can highlight outside the Republic there. You get it? You can highlight outside the Republic.
Okay.
So that answers you, right? It should be outside the Republic. It should be outside the Republic. Once that property is brought here, it's now a different story altogether. Okay. Because the question would be, where is the property? It is in Bloemfontein. Is it situated outside the Republic? No. So does section 56(1)G apply? No, because the property is here.
Okay.
You get it? So that's how it's going to be.
Okay.
Okay. Right. I've shared question there. So where are they? Well, I shared question in the group. I want to see donation text question here. Okay. Okay. So right. The same question that we did last week. Right. Here we go. So I'll go straight to what we did in class, because I know you'll be able to respond. Right. So CTA ITC honors, we start by the required. So I'm going to identify the required and answer the question based on what we've done, the VET questions, and others we'll see later when we do those topics. So right now, they take us to query 1 here. There are some donations, and they're going to ask us the what? The donations tax implications. Right, so we'll do it the traditional way, where they used to give us scenario, we go through scenario, then the required will come after, because we don't know, maybe it's gonna be venue based, and they go to the old way of doing things. Right, so there we go, good people. Right, so I'll go straight to that for the interest of time. On 1 March 2020, Safe in the Sun Limited donated suntan product with a cost price of 20,000 and a market value of 27,500 to a local community project, which is not a public benefit organization. So no one is going to say, it's exempt, section 56(1)H, because they say it is not. You can assume that this is the first donation made by Safe in the Sun Limited in the current financial year. So this statement also, it is very important, first donation. You might be asking yourself to say, is it necessary for them to tell us whether it's first or second? Yes, it is. The way you are going to apply your exemption in terms of section 56(2)A, in the case of it being a casual gift, because you are talking about a company. We move on to number 2. On 15 June 2020, Mr. Wave, the sole trader, instructed the stock store manager to donate suntan products with a cost price of 1,000 and a market value of 1,250 to his son's cricket team before their winter tour to Durban. There were no advertising benefit derived from the donation. Okay. 3, on 15 September 2020, Safe in the Sun Limited donated suntan products with a market value of 5,000 and a cost price of 4,500 to the Sunshine Children's Home, a registered PPO. Okay, it's a paper that was written by other kids. Then we move to the required. Now, calculate all the donation tax implications of query 1 for suntan, for Safe in the Sun Limited, and indicate when the donation tax, if any, would be paid, right? So understand the question and address the question in full is a test of competence at this level. If you calculate and go home, you have problems. Did you state the debt? Address every donation in your answer, even if another person is liable for donation tax. For a reason. Remember, we've got instances where a donation is made by another person and another one is liable. We told you that in this section. So now here, when we are here now, it's about the application of the act. They never said in terms of section what, in terms of section this. It is for you now to see that, okay, here they're testing you on this section. Here they're testing you on this section. Right, number one. You see, if in the donations they are given, they didn't say the company made 3 donations in the what. They even tell you that on this date. Why? Because we have to see you calculating in the order in which the donations were made, number one. Number two, for the purposes of applying your section 56(2)(a) in the case of a company, 56(2)(b) exemptions. They are applied in order in which the donations were made. I will do the first one. Now I'm going to calculate and make reference to what? To sections as well. It will make your life easy if you have to discuss and not calculate, or to calculate or to discuss, then supported by calculation. We have got that donation. So now the marker will know that you know if we are going to write neatly and say 1 March 2020, you are also showing him that I know that the donation is calculated per donation, the donation tax is calculated per donation. I'm just like you. Right. Then we come here now. You're applying, good people, don't just say donation. Safe in the Sun donated Santan products with the cost price of that market value to a local community project, which is not a public benefit organization. So here I will write donation. There's donation tax implication there. Donations to local community project. Right. So I have to quote the value. They give me a lot of things there so that only those who have studied can be able to respond to that. We are given the cost, we are given the market value. In terms of section 62, we take the market value. I quote here, section 62, being 27,500. This is a company. Now, the next question that I ask myself is, do I apply my 20% straight? No, this is not taxable donation yet. I need to take it to turn it to a taxable donation by considering the exemptions, if any. Now, in this case, we all see that the market value is more than 10,000. So this is not a casual gift. So for the purposes of communication, I can write here, section 56(2)(a) does not apply as the donation is not a casual gift, is not a casual gift. EI worth more than 10,000. So we don't have that exemptions. Then that takes us straight to taxable donation, which is 27,500. Thereafter, I come here now and say donations tax at 20%. I'm going to use 20% here. They forgot to tell us about the cumulative donations, but let's assume that they do not exceed 30 million. So here I have to quote this section, section 64, or else someone will say, where is the 20% coming from? It is there in your act. Then I say 5,500. Then I have to say due date. The donation tax should be paid over due date. Apply, good people. It was made on 1 March. Before the end of the month, following the month in which the donation was paid, must be paid off. Month after March, it's April. April ends on 30 April. 30 April 2020. Where are we getting this from? Section 61. See now why we have to go through the section. It's because we'll use them. We're not going through them just for fun. We go through them because we make use of them. Now you see them being used there. Good. Then you get all the marks, good people. If you are to discuss, you just follow this. So in your discussion, you should picture the calculation. You can say it right now. Safe in the sun, donated products to a local community project, which is not a public benefit organization. Therefore, section 56(1)(h) does not apply. The local community project is not a registered public benefit organization. Then we can say, right, the market value, in terms of section 62, the market value is the deemed value of the donation, being 27,500. Section 56(2)(a) does not apply to the donation because it is not a casual gift. The donation exceeds 10,000. Right? The taxable donation shall therefore be an amount of 27,500. Then we can say, assume, if they did not tell you about the cumulative donations, assume the cumulative donations for Safe in the Sun does not exceed 30 million. The donation tax shall be calculated in terms of section 6 at 20%. Then you can show a calculation after that. Then, as the donation was made on 1 March 2020, it should be paid over to SARS by 30 April 2020. We quote section 61. Okay. That will be proof enough that the student actually studied during the course of the semester. Right? And you won't have any problems there. You won't have to apply for any remark or what, they will just pass you. Right? We pick another donation on 15 June. 15 June 2020. Right, Mr. Owave, the sole shareholder instructed the stock store manager to donate certain products with a cost price of 1,000 and a market value of 1,250 to his son's cricket team before the winter tour to Devon. There was no advertising benefit derived from the donation. Okay, so even if another person is liable, you need to what? To calculate. So here we are going to say that now, section 57 apply. Therefore, whoever is deemed to have met the donation. So here we need to make a little bit of background story. Is it calculated for the company? So for the company, there's no liability because section 57 applies. Section 57 says that now, if someone instructs a company to make a donation, that person who gave the instruction is the one who deemed to have donated. And here they told us that you need to calculate, even if someone is liable, you need to calculate. So here we need to indicate to them that, okay, we see it's Wave who made the what, who is deemed to have donated. So here we can say donation tax for Wave. It's now going to be applying to Wave. Then we can say donation to cricket team, donation by Wave to cricket team. Is him who is deemed to have donated. Section 62, good people. What comes after section 62 there? We need to see the market value. We go and scan for the market value. It's 1,250. Right, Mr. Wave is a natural person. During any F assessment, there is a portion of the donation tax that is exempt. So we come here and say section 56, 2B. It is an amount of 100,000, but in this case, limited to 1250. Taxable donation becomes nil. Right, then donations tax. Section 64 at 20% is going to be nil. Don't say because here there's no taxable donation, you don't go as far as that. That would be wrong. Because in other words, you are saying it's not a taxable donation, not tax, zero tax. Right, it due date 30 July 2020. So you still have to proceed. Because if you don't proceed, if you don't show us the red, it's gonna be a problem. Okay, we move on to that one. On 15 September 2020, Safe in the Sun donated Santan products with a market value of 5,000 and a cost price of 4.5 to Sunshine Children's Home, a registered PBO. 50 in September. 15 September, this is also communicating something there. That donation tax is payable per donation. You are communicating the issue of section 62 there. Right, donation to, you write the name there. You want application. If they give you a name like that, they give you a name and they tell you it's a PPO, then when I simply say PPO, it won't be nice for the mark. Donation to Sunshine, a public benefit, a registered, only to a registered PBO. Here we got section 56(1)(h), good people. It's a public benefit organization. It is exempt from donations tax. Okay, so now you see how these sections are applied here. That's why when we go through sections, people, be with us, listen carefully, interpret the section, so that now when it is used, right? So that now when it is interpreted, when it is applied in the scenario, you are able to follow. But if you are reading those sections about like a newspaper, when you get to a question, that's when you see that, this thing is serious, most. Then you start now going back to the questions and trying to read now with the purpose of what? Of understanding. Right, so that one is done. That one is done. Let's see here. Oh, this is the similar to the one that I was doing. This one.
Sorry. Do we use the market value or the cost? The cost price for the donation to the registered PBO?
We exempt it. It's
Okay,
exempt.
thank you.
Section 50. So yes, remember the value is always the market value. That's section 62. That's why even when we started, they had to define what the market value is. It was for that purpose, right? Let me see if I can get something to do. Okay, yes, there is another question there that I'm going to do with you guys there. Right. I hope it's making sense. Right, here's another question also. Oh, another question there. These are the past test for people. That's how you'll be asked in the exam and as well as the test, just like that. But you should have done your stuff. All right, so this one is here in query 2, and I go to query 2. Now look at this one. We go to query 2 there. It says query 2 is this one. Okay, let me check if there is anyone who is waiting from there. They mustn't be left behind. Right, there is a query too. It says, Plain Sailing Limited has a December year end. On 30 June 2020, the company donated an amount of 100,000 to a newly established child welfare, not a public benefit organization. They told us that. Now, this is money, right? In money, people, if a value of R1 is R1, don't say we're not given market value of that 100,000 rands. No, we also know it even in accounting. You are a 7 there. Definition of a cash and cash equivalent. Right. We come here, good people. Discuss the donations tax implications, if any, for plain sailing in respect of the donation in query 2, in respect of the 2020 of assessment. They say 2 marks. This same question, it can come with 10 marks. It can come with 15 marks. And you will see that it may still make sense to have it out of so many marks. So discuss the donation tax implications. So I'm going to discuss this like as if it was out of 15 marks, because I have to go for the worst case scenario. If I discuss it for 2 marks purposes, I'm limiting you. If a similar question comes again, and it's now out of 15 marks, you will struggle. Right, so in your discussion there, what did we learn? That only resident companies are liable for donation tax. So given that here we are not told, if you are not told whether it's a resident company or not, we are in South Africa here, we can't assume that it's not a resident company or not ground. If you are not going to say it's not a resident company, you would have to tell us then that it's a resident, it's a company that is incorporated in which country. So let's go for it. In discussing that one, make for 15 marks, I am going to say plain sailing is a resident company, therefore liable for donations tax on any donations made. Then I say section 54. It's section 54 that says resident companies or resident persons, and person covers a company and a natural person alive for donation tax. Now, if it's out of 15 there are a whole lot of sections for students to touch. If you're going to talk about one section, because the coverage in tax is based on the sections that were actually incorporated in that question. More marks means more sections are being tested there. So you get that one, first section is applied. Then you also have to give a brief background of what is happening from the scenario. You're using your own scenario to what? To beat them. So you're going to say that now, on 30 January, the company donated to a child welfare. On 30 January 2020, plain sailing donated to a child welfare, then I say comma, which is not a PBO. Right. Another section that we can touch there is that section 56 1H does not apply because the welfare is not a PBO registered. So that's the thought process when you're doing a question on donation tax. First, you need to test and show the marker whether it is exempt in terms of section 56. Right? If it's not, then you check the marker to the calculation of the taxable donation now. Let's not go to calculate or discuss the liability before indicating that section 56 does not apply on this donation. Indicate, that's how we move. Even when they gave us 56.1, which was talking about the exemptions before they could tell us about section 56.2b, section 56.2, which was doing my partial exemptions. It was for a purpose. We also do like that. don't take the marker to section 56.2 before telling him that 56.1 does not apply. Right. Thereafter, we can then, what do? Picture your framework for you to discuss nicely. Otherwise, you'll be all over the place there, not knowing what to say next. You've got the information in your head, but you can't put it down. Let's picture our framework. Framework, it wants the market value there. First at the top. Then we are going to say section 62 deems the value of donation to be the market value. Market value. In this case, 100,000. 100,000. Now I'm picturing the framework. I am going to talk according to that framework because we know that now when we are calculating, you put down the value of the donation, then we consider the exemptions. Now I have to go down to say, is there any portion of that 100,000 which is not exempt, which is exempt? This is a compound, remember? So we think in terms of section 56.2a. Right, I'm moving with my framework. I'm picturing my framework to guide my discussion because I shouldn't be all over like as if I'm a headless chicken. I take the marker to the next step. If something does not apply, I tell them. I don't just jump to the next thing. Now I'm going to tell the marker there that section 56.2a does not apply as the donation by plain selling is not a casual gift. EI worth more than 10,000. It is key that I indicate that as plain selling, you are also communicating something to the marker that this casual gift thing applies to companies. If I generalize it, say as the donation is less than 10,000, depending on the marker, if it's cruel, you can do something there to make sure that you pay. Right? So there's no exemption. Then I go down there. Then I say the taxable donation shall therefore be an amount of 100,000. You are writing, it shows that you are not in a hurry, you are relaxed, you know what you are doing. You are not just all over. 1 minute, you are now on 20%, the next minute you go back to the value of the donation. Before we know it, you are talking about the due date. Let's say you're advising someone there. You'll be confusing them. Right, we move. Right, we are on tax. Then now we have to go to the rate. Right. They didn't say about anything about the 30 million, so I always assume the value did not, because if I assume that the accumulative donation is more than 30 million, they'll say, you give us those donations. I'll get stuck. Assuming the cumulative value of donations by plain selling does not exceed 30 million. Plain selling will be liable for donation tax or donations tax at 20%. Then I can say section 64. Then you can calculate, even though they said discuss mostly, here they didn't say do not include calculation. So I can go ahead and do it. It's very simple. Even a lazy person can do that. Then I say donations tax liability is equal to, you calculate the 20,000. Then you show working, good people. Thereafter, I would then say the due date. As the donation was made in January 2020, Section 61 requires that this donation tax of 20,000 should be paid by 29 February, because this is a leap year, 2020. This is a leap year, and they chose it maybe to actually punish you heavily. If you say 28, they say, oh, see, the whole honest student who doesn't know that a leap year, if a leap year January ends 29. Right, so you see how it is there. You see how it is there. Not right. It will only take a student who would have gone through the material, which is in the syllabus, to say all those things. Otherwise, you will jump, you show the examiner that you really need these marks, but there is no content. End up repeating some stuff, you are not going anywhere. If you don't have the content, if you did not go through the stuff, you did not go through it. You don't know. All right. So there we go. Then you look for a company for a question for an extra person. I'll also share it. Right. Then let me hear from you. Let me hear from you. Do we do these sections or we are tired? Okay, depending on the level of confusion. Okay, so maybe we can do them some other day, yeah? Right? Yes.
When is the next class and how much are the sessions, Mr. Piri?
Okay, yeah, we're going to share that information shortly in the group. All right. So that's how you study. I've shown you the way, good people. You have to. If you don't have content, if you did not gather content during the course of the semester, they will see it. And you know what they do when they see it. They give you a zero. Right, so here's a homework. Go and exercise and flex your brain muscle and try to figure out what is happening there. I tried all these things for free because that's the whole topic was. All right, yeah, so I will share the video there in case you wish to reference. Yes, so